Good evening and welcome to the Smart Entrepreneurship Decoded on Transcontinental Times. Over the last few weeks, I think we've had more than 20 episodes so far. While we have spoken to every kind of stakeholder in the startup ecosystem, we have concentrated a lot on the investors because entrepreneurs are very keen on that. Although I don't agree, today funding is taken as a badge of honor and almost as a birthright. In the investor community, we have spoken to a wide variety of people. We have spoken right at the top of the food chain to people who take companies to IPO. We have spoken to private equity people. We have spoken to venture capitalists. We have spoken to angel investors. We have spoken to somebody who ran a family office. And we have spoken to people who run alternate investment funds, etc., or small angel networks. Tonight, from Kolkata, we have the founder and head of Ekel Advisory, who is very ingrained and embedded in three distinct parts of the investment cycle. He's got a fund or a group of investors who he brings together for deals, for small seed and pre-seed deals. He participates and co-invests with other investors in larger deals, and he has an advisory firm where he advises companies when the deals get really big. Join me in welcoming Vikram Duggal from Kolkata. Welcome, Vikram.
Thank you so much, Nalin. Happy to be here.
So, I was reading up a little bit about you, where we read on LinkedIn, right, where all of us land up knowing each other. I was very surprised to see that you and I had 157 common contacts, which is amazing. That we don't know each other and the way technology goes today. But I was reading that you also came off a corporate background. So at what point, you wouldn't have one day woken up and said, I'm going to now get people invested. What triggered that? How did you get into this?
So, in fact, the start of this was with my one of the earlier companies I had worked for while I was in Pune. That was a technology internet security startup. So that really I think that must have been the genesis, because that got the bug of entrepreneurship, startups, into me. And subsequently, down the line, I had to move back to Kolkata, which is where I'm from originally, for family reasons. So obviously, there are not too many corporate opportunities here. So that's when I decided to start out on my own, basically work with startups, help them with marketing, strategies, sales, stuff that I've been doing pretty much with my entire corporate life. So one thing led to another, and I guess, so I was onboarded as a mentor and advisor with IIM Calcutta and IIT Kanpur's incubation centers. I was helping United Seed Fund then, now United Ventures with their deal sourcing. So like I said, one thing led to another, and then suddenly I found myself investing as an angel investor, and now we have an angel network of our own called Ekel Ventures.
So when entrepreneurs start up, they always have a certain pivoting point where they think that, okay, it's beginning to happen, and cracking the first few deals or first few investors is very difficult. Now, when you get into a field like this, how difficult is it to get the first few investors to trust your judgment and invest with you in what you are suggesting?
So, yeah, I would say before getting their trust, there have to be certain credentials, of course. Mm-hmm. So, which is why for the first, I think, a good 2 to 3 years, I spent just as part of the ecosystem learning the ropes. Being associated with such kind of entities, like I mentioned, United, IIM Calcutta, IIT Kanpur. You end up meeting a whole bunch of people, and then you learn from them. I'm still learning every single day. I learn a lot from every single interaction that we have been with the entrepreneurs. So, and then you start making your own investments, and when your own investments start doing good, they start showing those kind of returns. I think that's when one can get that kind of confidence to go to others and say that, hey, this is what I've been doing. If you're interested, why don't you be part of our network? So I think it was both ways. On some occasions, a few common friends and batchmates, they said, hey, you guys seem to have picked some interesting companies. Next time you've got a good deal, share with us. And on the other side, we specifically also approached a few people and said, hey, we'd love to have you on a platform. So that's how I guess it started off.
A lot like the friends and family rounds that an entrepreneur does, you did the same thing in the investment space. So for a lot of the people who watch our show, they are first-time entrepreneurs. They really don't know how this works. They understand VC, they understand family office and all that. But when you syndicate across a group of investors at seed and pre-seed stage, people individually don't want to do the deal, they want to do it with others. How does that work? I mean, what is that mechanism or document? How does that work?
So I would say, when one is already, either directly through their own efforts or through an incubator or accelerator reaching out, or even an iBanker for that matter. But I don't think there are too many iBanking outfits so early in the early stages. But when they start reaching out to angel investors, I think the first thing that they obviously need is a pitch deck, right? Or an investment memorandum, if you may call it so. And using that document, I think, I always advise people to reach out to an angel network rather than individuals specifically, because the network will, have 20, 100 people, or maybe thousands of people, depending on their size and scale, who will each have varied interests and varied sector focus. So no matter what your particular sector is, invariably you might appeal as a business to some of the other investor who's part of that network, if you approach a network, rather than going to one individual. Because the effort is, quite humongous in terms of reaching out to investors, getting calls, sharing the MIS and financials. So it's just too much and takes the focus away from business, which is where one should really be focusing on. So it makes sense if you can get somebody to help you, which a network does in most cases, and somebody in the network is doing that for you, setting up the calls for you, doing the initial, lining up the meetings for you, doing the internal pitching, internal selling for you. So I think that really kind of takes the whole pressure.
So, there is an entrepreneur, there's a pitch deck, it has gone past your selection criteria and all that, and you put it out there to your 100, 200, 300 investors, 6 or 7 show interest, and they agree to do the deal. How does that structuring work? Do they all get equal? Is it different? What kind of documentation takes place there?
So, basis, the first, or it takes more than one call. I mean, it takes a couple of calls, a couple of interactions, and once it's 6, 7 guys, and then they obviously go through the financials, MIS and whatnot. Then we ask them for their interest and how much they are willing to participate. So every angel network has a minimum ticket size. So it could be like 5 lakhs or 3 lakhs or 10 lakhs, whatever. We typically have a much higher ticket size because we have lesser number of investors on the cap table, but more better names and adding a lot much more value. So depending on the ticket size, everyone comes in with their amount. So somebody says they'll put in 25, somebody says they'll put in 1 star. Totally depends on how much interest, how much interested they are in that specific deal. And then we combine all that amount together and issue a common term sheet. And these guys have already worked with us, so they know that they are depending on us. The investors are depending on us to do the due diligence, the documentation. So we issue a common term sheet. Once the entrepreneur says okay, then we start with the financial and the legal due diligence. Once that is done, then the shareholding agreement is shared, and that is signed, and post which the funds are transferred.
Okay, so in this arrangement, when an entrepreneur approaches you, do you have a fixed fee and a charge both sides, or how does it work? I'm not asking your format. I'm saying generally, how does it work?
So, so I think Indian Angel Network is probably, because it was, I think, probably the first one and one of the earliest ones. It's probably the only one which has managed to charge the investors. So they charge an annual fee, and I think they deliver that kind of value as well. But and hence they don't charge from the startups. But most other angel networks, investors have become really picky. In fact, after that, today even LPs are negotiating with the VC funds about whether they want to pay the 2% management fee or whether they want to share part of the 20% carry or not. So investors have become quite choosy and picky. So it's very difficult for them to get to pay, and there are obviously costs associated with this. So most of the angel networks, in fact, charge the entrepreneurs, the founders. So with the success fee, that's a certain percentage of the amount being raised, which basically then takes care of all these associated costs.
Okay. So you probably get deluged with pitch decks as much as I do. When there was no pandemic and we actually met human beings face to face or now on video, and you get all these hyper excited people pitching to you, what is it in the first few minutes or how much of a time you take that you're looking for that will make you speak to this person again?
So definitely we are looking at, what the innovation is or what the product or service differentiator is, the uniqueness of the idea, if you might call it so. But more than that, what you're looking at is the scalability of this. How big can it really become? So, I mean, every business is a good business, right? I mean, but whether it becomes a unicorn or whether it, remains a MSME, small family business, totally depends on scale and size, right? So that's one aspect. That how big is the TAM, as we call it, total addressable market? What's the scalability? How big can this really get? And secondly, what's really the vibe that we're getting from the founders? Because we don't know them from Adams. I mean, we just basically are relying on whatever they're sharing with us. So it's at the end of the day, you're betting on the guys to drive the business, right? So you want a bunch of people who are passionate and committed, persevering, dedicated, and whatnot, and transparent, ethical, so on and so forth. So pretty much, I think those are the few things that will make us have further conversations.
If you were to weigh these two, because very often some people say people invest on people, not just ideas. If you were to weigh these two, how much is backing the person versus just the idea?
Always the person, because I mean, even if the idea is great, if you have put a lousy person behind the wheel, you're not going to get anywhere. But if you've got a great guy behind the wheel, even if you give them a lousy idea, he'll still manage to make something. So it's always the person first.
So let's shift from entrepreneurs to the general market now. What are investors finding interesting now in the pandemic? What is coming on your table? What is exciting investors? What kind of industries? What kind of ideas?
So I would not. I'm not saying this for the entire ecosystem because everyone has different sector focuses and everyone has different investment hypotheses. But from our angel network perspective, because all these are individuals, they obviously have a lot of affinity towards consumer products and services rather than something which is deep tech. Because a lot of these guys are businessmen, are business owners, and they are running consumer businesses. So obviously they understand that space a lot much more better. And in the pandemic, a lot of these consumer products and services have been doing pretty well. Consumption is still happening at home, even if it isn't happening in the hotels and restaurants. It's still happening at home. So that's definitely one space. Electric vehicles, lithium-ion batteries, that entire space, charging stations. That space is also seeing a lot of action. Seeing a lot of interest from people. And of course, agri-tech, because again, this pandemic has brought the focus back on nutrition and health and good food and, fresh from the farm and whatnot. So I think those are, again, areas that we are seeing a lot of interest.
So you've been doing this for quite a long time and doing it successfully. Over the last few years or even longer, can you talk us through one investment that's been a real super hit for you? You need not name the company if you don't want to, but at least tell us about what worked. What worked, whether it was a founder, idea, market, timing, what worked?
I think everything. So this company is obviously in this whole EV, electric vehicle space, batteries, whatever space. Uh, so what's worked is obviously the founder, um, great credentials, um, premium institutes, world famous institutes is where they've done their, undergrad and masters and, postgrad and whatnot from. Um, Also, the timing. Uh, but, just when everybody was getting interested in this is when they started picking up business. I think flexibility, being nimble to quickly pivot models after COVID and lockdown and pandemic struck. Because I think everybody's revenues got impacted in some form of cash flow. But being able to quickly move with, being able to shift gears on the fly, change tracks, uh, and still manage to scale up, still manage to show that kind of growth. That's phenomenal. So I think at the end of the day, it's just a whole bunch of things that came together, and things really worked out well. I think for them. We've seen them grow more than 10x in less than a year. So I think in that sense, that's really something we are betting big on.
So if you look at the process, from the selection process or the curation process of getting startups that will suit your angel network, from there, when you start conversations, right up to the point when money is transferred, things can go wrong. There are so many places where you sign agreements and still the money never comes, etc., etc. In your experience, what is it that thing that puts off investors? What I'm not talking of negotiation. I'm not talking of clauses. Forget that. But sometimes people just get put off and walk away. What are some of those things that entrepreneurs should watch out for in this process?
Right? So I think the most important thing is the red flags that come up during the due diligence process, because when entrepreneurs have not done the basics of meeting compliances or regulatory issues, filing their returns on time, taxes, GST, whatnot. Uh, I mean, they forget to take care of these. They think it's a small stuff. It's not really that big. We'll take it later. But I think,
Basic hygiene.
sorry,
Basic hygiene stuff, right?
basic hygiene stuff. But the investors, they get a little uncomfortable with the lack of discipline. And if you've got things like your accounts, your bank statement is not matching with your accounts ledger, there's too much of cash transactions happening. You've got some past financial, or legal notices against you, or people have written, really bad testimonials about you. So all these kind of things, they really kind of put off. And sometimes it's also at the end of the day, so investors, while they're putting in the money, it's not just really about the money. That's the. From both from the entrepreneurs side, they should be looking at getting people who can add value in terms of business advice, market linkages, connects, and whatnot, right? And domain expertise. And the investors also, at the end of the day, want to feel that they are contributing something to this company and in their success story, in the journey. So I think an important part of this interaction is the ability to be able to listen to different perspectives, different views, and not be close to that. So a lot of times what happens is initially it's pretty hunky dory, but the moment a few inputs and suggestions start coming, and if the entrepreneur seems pretty closed and is not willing to even hear out a different perspective, then that just kind of rubs people off the wrong way. So there are a whole bunch of things that needs to be careful about.
Now you make a very important point about life after funding. So I often tell people, once you take money from anybody, whether it's your father, mother, brother, sister, basically you're a bonded laborer. You may not like it, you may not like the term, it's crude and extreme, but if your pride and ego does not allow for you to listen to anybody, then you are going to suffer. What's your view on life post investment for entrepreneurs and how they should approach it and think about it?
So I think just like we have every different kind of people, different kind of mentalities, different kind of attitudes, both from investor side as well as entrepreneur side. There will be some investors who will just be totally hands-off approach. They rarely want to get involved. They don't want to be part of typically the meetings. They just tell us that, hey, whatever you guys want to take a call, go ahead with it. We are fine. They don't interfere too much. But there are some investors who kind of would like to be updated about every small little thing. They want to be part of the board meetings, the review meetings. They want to keep on sharing some inputs off and on. They want to keep meeting up with the founders. So totally depends how you manage and handle each different kind of personality. But I think keeping a bare basic minimum in terms of sending out regular monthly updates, sharing the monthly basic macro numbers. You don't need. I mean, somebody might ask for a MIS, detailed MIS. That's a completely separate issue. But at least the macro numbers in terms of what revenues, what are the expenses, profit or loss, how many customers, basics. Just the macro numbers. If you're sharing key business updates. I think that just keeps everybody, I think in a good, comfortable space, knowing that yes, they're aware of where the company is going, what's really happening. They don't feel uncomfortable with the lack of information. I think that's important.
So forget your other investors for a moment, your fund, etc. If you invest personally in a company, what will be the amount? What kind of investor are you? Do you like to watch everything? Do you like to see everything? Do you like to get involved in the strategy, or you're okay to step back?
So we have a simple philosophy that unless something is really critical where we feel we should intervene and share our inputs and share our suggestions, we try to stay away, let them do their own thing until and unless we are asked for advice or suggestions. Because I firmly believe that unsolicited advice is never welcome. So if somebody is asking specifically that, hey, guys, I need help on this, sure, we'd be more than happy to go out on a limb, give our left arm for you and do everything possible to make things work. But we're not going to jump jump the gun and start saying, hey, do this, do that, because sometimes those guys know the space, their business better than anybody else. So, and the reason we have invested is because we have that kind of confidence that they'll be able to manage it. So let them do their thing.
That's a wise way to approach it. I'm going to end by asking you a kind of tricky question. I hope I have my facts right. I think pre-show we were speaking about Eccl having offices in Gurgaon, Mumbai, and Kolkata.
That's great.
Why not Bangalore and Hyderabad?
Well, we are looking to create a presence there, but somehow, like I was sharing with you, it's just one thing that that's led to another for us in our history. Nothing was premeditated and nothing was in that sense well thought out kind of a thing beforehand or well planned thing. It was just something that kept happening. Delhi, we opened, so we have a presence in Mumbai because my partner is based out of Mumbai.
Sure.
And I'm physically located in Kolkata. But most of our startup companies and our portfolio, for some strange reason, are out Delhi, India. So we had to develop a presence there, right? So just one thing which led to another. Now we're looking at expanding our footprint to Bangalore as well.
Okay. So one last question. I'm getting greedy because your answers are so succinct and to the point. For an entrepreneur, you expect 10x growth, right? It's fair, at least in the initial years. Even Infosys was doubling, tripling revenue for many years, maybe a decade, every quarter. But for an advisory firm like yours, for venture firms, etc., when you look at the growth of India over the next 5, 10, 15 years and the sheer opportunity it provides, what's next? Is it more of the same? Is it bigger, higher? Or how does one scale this? Because it's a knowledge thing, right?
Sorry, further?
There's a lot of knowledge in this. It's not just adding a product or putting some technology. What you do is very specialized. How do you scale something that is service-oriented and a knowledge offering?
So I think, everything, the whole ecosystem, I think, is growing by leaps and bounds. If you see, I think this year we've already got 26 unicorns, companies that have reached the status of a unicorn within one single year. And I think out of the past 7-8 years, there have been a total of 50 plus unicorns. So imagine if you are already reaching half the total number of unicorns within 1 year itself. So, I mean, that's the kind of way the companies are scaling up. So obviously there will be need of as many advisors, people, your investors, people who can raise the funds for them, people who can provide transaction advisory and whatnot, right? So angel networks are coming up. There's so many VC funds, new VC funds that have gotten launched as well. There's so many people who are seeing that after this, you know, maybe their friends and the people in the network whose investments have done well. A lot of super HNIs who figure out that, hey, let me not put all my money in public markets. Let me also start putting my money in some private markets. Let me also invest in the startup system. So you're getting a lot of fresh blood into the ecosystem in terms of a lot of people joining in, entrepreneurs thinking of people saying, hey, let me not look at a regular job. Let me look at working, mid-aged working professionals who work for a good 15, 20 years saying, hey, I think now if I don't do a startup now, it's not going to be never, right? So there are a whole bunch of new things that are happening. So I think there'll always be the demand for more and more such kind of similar entities, service providers and whatnot, more incubators, more accelerators. So I think India's really on the cusp of a huge, big boom in terms of startups.
It's almost an innovation explosion, right? Everywhere, you know, I've been to Assam, Kerala. The startup ecosystems are so vibrant, and there's so much innovation happening. Vikram, I'm very grateful to you for having joined us tonight. You have definitely enlightened our audience. Thank you very much. I hope you have a great night.
So thank you so much for having me. In fact, I should be the one thanking you for this opportunity, and it was lovely speaking with you.
Thank you, Vikram.
Thanks. Good night.
Have a good night.